So tonight's discussion is going to be a little bit different than what you might expect from a debate. It's not formal. I'm not going to run down one by one, give everyone a minute to answer a question, because I find that that format is a little bit stilting. And we have a really important topic tonight, which is the insurance commissioner. And for those of you who are not aware of the important position that the insurance commissioner holds, it's basically a consumer protection position, where the interest of California ratepayers and insureds should be the thing that is most important, safeguarding from the insurance industry. And so we're going to just start off tonight by asking each of our candidates to give maybe a 1 minute to 90-second intro about who they are, what they stand for, and why they're running for insurance commissioner. And we will start with Senator Allen.
Well, thank you so much, Nancy. Appreciate that very much, and thanks for pulling this together. My name is Ben Allen. I'm a state senator. I've been representing portions of Los Angeles now for 12 years in the state legislature. I'm a dad of 2 kids. My wife and I live with our children in the LA area, just down the road from the terrible fire that we experienced on the west side. Really awful experience. So much of our time was spent just over the past year helping our constituents get back on their feet, get payouts from the insurance industry, taking on the insurance industry. I ended up running legislation that they opposed to force increases in payouts in the case of contents coverage when people have lost everything. We ended up getting that through. That was a very difficult process. I've got a long track record of success in the legislature working on environmental protections, environmental justice issues. We took on the petrochemical interests through the passage of SB 54, a big plastics waste reduction bill. I was the lead author of the climate bond we passed just last go around, which has significant new resources for wildfire resiliency and water infrastructure. I've also been a champion for consumer protections. I mentioned the insurance bill, but I've also taken on the car dealers on increasing transparency for the car purchasing process and hospice reform and a number of other important bills. So I come into this race with a deep understanding of the legislative process, experiencing this terrible tragedy in my own community and seeing up close the dysfunction of the insurance system and how it impacts working people. And then, of course, I come in with a lot of really great support, folks like Adam Schiff and California Environmental Voters and our firefighters and California Federation of Teachers, most of the members of the legislature and a dozen members of Congress. So I think they all know that with me, they have someone who's a strong fighter for people. I'm not taking any money from the insurance industry. I've also been a clean money champion every single year of my time in the legislature with the California Clean Money Campaign because of my commitment to ethics and transparency. So running for insurance commissioner and looking forward to a great debate.
Thank you. Thank you. Assemblymember Bradford.
Good evening, and thank you, San Francisco Democrats, for this opportunity. My name is Steve Bradford, and I've spent the last 26 years of my life as an elected public servant, not as a politician. I started off in college to be a doctor. I had every intention of being a doctor, and I was convinced my senior year to switch my major to poli-sci. I met an amazing individual who impacted my life, the late Merv Dimely, a former assemblyman, former state senator, the only African-American lieutenant governor the state had, and also a U.S. congressperson. And he never encouraged me to run for office. He encouraged me to get involved in my community. So that's why I'm here tonight. I've spent 12 years as the first African-American elected to the Gardena City Council, a city that was on the brink of bankruptcy 26 years ago because they started a ill-advised insurance company, a mutual municipal insurance company that at the time I got elected, Gardena was $27 million in debt. Our employees hadn't had raises in over 5 years. We hadn't bought any new rolling stock, had no money in the bank. When I left the council 12 years later, we'd eliminated that $27 million debt. We had $8.5 million in the bank. We'd given our employees 3 raises, and we did it without raising taxes, laying off a single employee, or cutting city services. We did it by working harder and smarter. Then I went on to the California State Assembly and the Senate, where I served 14 years. I chaired utilities in both the Senate, and the Senate requiring me to work with consumers, requiring me to work with the PUC, and requiring me to work with the industry itself. So I'm here 9 months ago, I was a candidate for lieutenant governor, but I was heavily recruited by constituents, by my former colleagues, as well as the business interests in the state of California and organized labor. I have the support of Mayor Karen Bass, Mayor Todd Gloria, various other local elected officials, the state building trades, the men and women who are responsible for building our infrastructure has endorsed my candidacy. I'm doing this because we need to bring transparency and accountability to the insurance industry. I will do that as your next insurance commissioner.
Thank you. Merritt.
Hi there. My name is Merritt Farron, and I'm a wildfire survivor, former Amazon attorney, and I served as the head of legal, security, and guest claims at Disneyland after a 10-year stint at Disney. I'm the father of 2 sons, and I'm going to give a shout out to them because they are watching this streaming. My husband and I lost our home in the Palisades along with most of our friends who lost their homes and essentially all of our neighbors. The fire was, I think, unique in California's history in that it was not a typical wildfire that burned through wild zones. This was an urban fire that burned from house to house. And it was the direct result, and I'm convinced when everything comes out about this, we will all see that it was the direct result of multiple mistakes made at the city, county, and state level. Huge mistakes in advanced planning, the results of which, among other things, were that there was no water in the fire hydrants as of 3 p.m. the day the fire started, and it started at 10 that morning. My neighbors' houses all burned down, you can see in Ring cameras, without a fireman or woman around because there was no water in the fire hydrants. So after that, I then were looking to support my family and my friends, and then the next hit was insurance. And for many, that was and remains as traumatic an experience as the fire itself. They expected that they would have coverage. They found they either had no coverage. I know people who literally had not realized that their coverage had been canceled and had no coverage. And others are still fighting with their insurance companies to try and get the money to rebuild. Those who do have decent coverage are finding that it's incredibly difficult to get a full understanding of what the numbers will be that they will get. So I'm running to make a difference. I come from 2 companies, Amazon and Disney, that are all about innovation and all about serving customers well and doing well by serving customers well. That's the experience I want to bring.
Thank you, Merritt. Jane?
Good evening and welcome, everyone. My name is Jane Kim, and I am running to be insurance commissioner to regulate and take on this $3.3 trillion industry. By the way, this industry is doing very well. The property and casualty insurance industry alone made $170 billion in 2024, with its top 10 CEOs making $391 million. Meanwhile, we do a very good job of regulating ourselves. We're required to have insurance to drive to work. We're required to have insurance to get a mortgage to buy our first home or to open a small business. And for that very reason, insurance has to be affordable and available to all of us. Otherwise, we are shutting everyday Californians out of our economy. I'm running to make insurance available and affordable for all of us by capping excess profits and CEO pay to keep rates down, to build a nonprofit single-payer natural disaster for all insurance program for all of California, and to expand our existing nonprofit car insurance here in California. The last 5 years, I have spent as a state director with Working Families Party and also working for Senator Bernie Sanders, building an electoral infrastructure to elect corporate-free candidates to office from school board to state legislature. And prior to that, I spent 12 years here as an elected on the San Francisco Board of Supervisors and School Board, where I was proud to have made San Francisco the only city to make community college tuition free again, to pass a $140 million revenue measure, still to this day, for early childhood education, pass the first $15 minimum wage ordinance in the state, and negotiated record levels of affordable middle-income housing without ever voting down a development deal. This is the energy that I want to bring to the insurance commissioner. I've been endorsed by some of the largest unions in the state, SEIU California, who represents our public employees, our janitors, our healthcare workers, California Teachers Association, and Federation of Teachers, the National Union of Healthcare Workers, my former boss, Senator Bernie Sanders, and Controller Malia Cohen, and I would be honored to earn your vote and endorsement in this race as well. Thank you.
Thank you, Jane. All right, Lalo.
So I would be remiss if I didn't start off by congratulating my union siblings in United Educators San Francisco, who recently pulled off. They recently pulled off one of the most historic strikes in San Francisco's history and in labor history that really proves to us that working people are the ones who are in charge. And that's my fundamental belief, is that people are the ones who make the change. Now, these days, buying a home, having the American dream is out of reach for most people, especially most of us in California, who are having to shoulder the increasing costs of essentials like homeowners insurance. And even though you need homeowners insurance to purchase a home, everywhere you look, the insurance companies are either pulling out of the zip code or they're raising rates well beyond what most people can afford. And they're doing this because we have an increased risk of wildfires every single year now because of the climate crisis. The climate crisis is the reason why we have an insurance crisis in this state today, where there's less and less coverage for higher and higher prices. Now, the climate crisis is racking up an enormous bill, but I don't believe that it should be the people of California who pay for it. I believe that the fossil fuel companies, the energy companies, the utilities, they're the ones who broke our environment. And if you break it, you buy it. So they should be the ones who pay for the solutions to this crisis. Right now, there are still 70% of people who are displaced from the fires in LA. They're still displaced today. That is a policy decision that is largely caused by the delays and denials of the insurance company. So if we want to take this issue head on, if we want to go toe-to-toe with the insurance companies, we need to freeze the rate increases. We need to investigate the largest insurers and hold the insurance executives accountable. And that's how we're going to guarantee fair, free, and full coverage for all Californians.
Okay, thank you, Lalo. Patrick?
Thank you. My name is Patrick Wolf. My wife and I we met in San Francisco in 1999. We've lived here continuously since 2005. Our two kids born and raised here. I've been very, very deeply involved in state and local politics over the last decade. I know many of you from some of the things that we've worked on together. I never thought that I would run for statewide elected office, but when the fires happened last year, because of my background, I was drawn to it to really try to understand the situation with insurance, the crisis that we have in California, the way our insurance system has let us down. And as I looked more deeply into it, I really came to appreciate it's a failure of regulation. And I want to bring it back to how Nancy started the introductions, that the role of the insurance commissioner is about consumer protection. That's absolutely correct. You absolutely have to be a champion for the consumer. We regulate the markets for the benefit of the customer. But it's also a technical role. It's also a role that requires that you understand insurance. It requires that you understand how insurance markets and financial markets operate. And I have 25 years of relevant professional experience. Early in my career, from 2001 to 2005, I worked at a major bank, where for those 4 years, my job was to build an auto and home insurance brokerage business. And for the last 20 years, I've worked as a financial analyst, where I've been analyzing and investing in markets and companies, including insurance. I've analyzed insurance markets, insurance balance sheets. I've worked with insurance companies and worked with insurance customers. And I want to briefly use just one example about this. One of the policies that I propose in terms of providing that consumer protection is to provide a scorecard for each individual customer so that you know whether or not the insurance company that you are with or thinking about purchasing their insurance, how they have behaved. Now, that scorecard is based on data called Market Annual Conduct Surveys, which I don't think any of my competitors even knew existed before I started talking about it. You have to really understand how this industry works in order to be able to craft the policies that will get the right outcomes. And that's what I will do if elected insurance commissioner.
Okay, thank you, Patrick. So it sounds like we're kind of getting to the meat of things. So I'm gonna pose a question that might be a little bit controversial. What is the current insurance commissioner getting wrong? I'll just leave that open to people.
How long do we have?
Merritt, it looks like you have something to say.
So I don't think I mentioned I jumped into the State Farm rate proceedings as a intervener on behalf of consumers. That's given me a firsthand look at the rate proceedings. There are things I could say about that, but the main thing that has done is it's given me an opportunity to look at a lot of different aspects of insurance. I recently was asked to look at some legislation proposed by Padilla. The department asked me to take a look at that and give some comments. There's a lot of good things in there. Here's what was missing: a plan to get rid of Fair Plan. So Fair Plan's makeup is that the insurance companies who are admitted in California are obligated to participate in Fair Plan. And if Fair Plan has a cash shortage, they're obligated to kick money in. So the problem with that is that the more they have to kick in, and they kick in based upon the number of policies they write in the state. So Fair Plan is creating an incentive for insurance companies to not renew policies, to drop people, and to leave the state. And when Fair Plan was little, the numbers weren't so great, and so they could handle that. But now, it is a huge problem, so we have to get rid of Fair Plan.
So let me give a little bit of context for Fair Plan, and if I'm getting any of this wrong, I'll leave it to our experts to correct me. So Fair Plan is kind of the insurance of last resort. It's a statutory construction where insurance companies pay into a fund, and then people who are not able to get insurance policies on the open market because of whatever risk they might have. So if you have a home in a wildfire area, or if in a flood area, and you're basically uninsurable, the Fair Plan provides an insurance policy for you. And so one of the things that is really broken about our insurance industry, in my opinion, is that we are basically pushing people who are the highest risk into one bucket, whereas insurance, the whole purpose of insurance is to make sure that we distribute risk among a large pool of ratepayers. So, you're talking about Fair Plan, we're moving a little bit away from what the current insurance commissioner is doing wrong.
Ooh, can I jump onto that? What the current insurance commissioner is doing wrong?
Sure, Patrick, why don't we go to you first?
Sure, because I want to jump off of what something Merritt brought up, which is the situation with State Farm. Because I'd like to explain how we got into this terrible situation. Since Merritt's suing State Farm, he probably has some familiarity with this. Back in 2017, 2018, when these terrible fires happened, the insurance companies realized that, as Alala was saying, the insurance, the climate risk has gotten much worse. And they had to be able to use forward-looking models, because change means the future is not going to be the same as the past. But the Department of Insurance didn't allow the insurance companies to use forward-looking models to predict climate risk, the fire risk. And so a number of insurance companies started leaving. That's what caused, as Nancy was talking about, the Fair Plan to start exploding in size. One insurance company, State Farm, jumped in to write policies at prices the Department of Insurance liked, taking a lot of market share. But in doing so, they structured themselves cleverly from a legal perspective, where the State Farm company in California is basically a P.O. box to hive off the financial exposure of the parent company. Well, the market gets sicker and sicker, fewer and fewer insurance companies, the Fair Plan exploding, the terrible fires happen, and then State Farm suddenly is upside down financially. That is the California sub, because the Department of Insurance, under Ricardo Lara, did not make the parent company responsible for the losses at State Farm. Now, because the market's so sick, State Farm has applied for a quote-unquote emergency rate hike, which I understand, Merritt, you're contesting. And the people in the Palisades are getting nickeled and dimed and treated terribly by State Farm, among other reasons because the State Farm in California doesn't have the money to pay them. But they're applying for an emergency rate hike, which they're getting because they're the only game in town, because the Department of Insurance allowed the market to get so sick. And they're forcing current and future customers to pay for their mistakes, which the Department of Insurance allowed to have happen. Meanwhile, they're treating their customers in the Palisades terribly.
So Ben,
if that's not a failure of regulation, I don't know what is.
Yeah, well, what do you think about everything that's... What do you think about everything that's happening with, I mean, these are your constituents down in the Palisades, and do you agree with what Patrick is saying?
He did a fantastic job of laying it all down. They basically, Patrick's absolutely right. One of the responsibilities of the insurance commissioner is to make sure that the market is operating in a functional way, that individual companies are not over leveraged in a particular neighborhood. And in this case, the other major thing is you need to make sure that the companies are going to be solvent enough to take care of people when a disaster does strike. And what's interesting here is that if you look at the latest survey the Department of Angels did of my constituents and the Eaton survivors, and you look at who people are most mad at and who they're actually happy with on their insurance side, surprise, surprise, it's the really undercapitalized insurers that people are most angry with. It's the folks that are so underwater because of the phenomenon that Patrick just described, that are nickeling and diming everyone, treating them, denying, delaying, playing games, messing with them at every level, and that's ultimately that's a market failure that the Department of Insurance was responsible for overseeing and needed to correct. So I think he did a fantastic job of outlining the problem.
Okay. And Stephen, what do you think about the FAIR Plan? What are in your view, what needs to be done with FAIR Plan?
Well, we first have to start transitioning people off the FAIR Plan. In the last 4 years, there's been a 230% increase in the FAIR Plan. For people who don't know, the FAIR Plan was started in 1968 because after the Watts civil unrest in 1965, traditional insurance companies stopped writing insurance in African American communities. It was never designed to have over 700,000 customers on it right now. So we have to stabilize the market in order to move these folks away from the FAIR Plan. I strongly support Assembly members Calderon's bill that was passed last year and the governor signed to help undergird the FAIR Plan by selling bonds to finance the risks. Right now, there's billions of dollars exposure that they're not covering right now. So the bond issue needs to be supported. So I support that. But again, the FAIR Plan was designed, as stated earlier, as the policy of last resort. But for many Californians, it's the only resort. It was never designed to that. So we have to, again, stabilize the companies, the traditional companies, and start migrating those people off of the FAIR Plan because it's failing folks miserably. It's nothing fair about the FAIR Plan right now.
Okay, I see you nodding your head a lot, Jane. You have something to jump in here with?
I think that's an important point the senator makes about the FAIR program, which was that it was started as a civil rights initiative, not to take on the riskiest homes, but to take on the homes that the insurance used to redline based on racism and classism. It was never meant to be a climate catastrophe fund, which is what it has become right now. But I want to address the question of what I think is not being addressed today. And that is, and I think we've heard it a bunch of times on the stage, that the private market is going to take care of us in the insurance industry. I fundamentally disagree with that statement because what we have right now, the way insurers work is they take our premiums and they invest it on the stock and bond market. That's how they've been making billions of dollars in the last 3 years. They've been going gangbusters. Nationally, actually, wildfires make up only 6% of their national payouts. And I'm not saying it won't grow, but they're not in the red as much as they would like us to think. So one of the inherent things about a profit-driven insurance industry is that the way they reduce their risk is by canceling insurance on what I like to call the homes with pre-existing conditions and the sick homes, right? The terms that we hear in healthcare. They keep all the healthy homes, but they raise premiums on all the rest of us, saying that wildfire is the reason why they raise it. That is a profit-driven insurance model. In a public model, we would collectively reduce our risk by actually investing our premiums and the returns from that premiums in resiliency, in infrastructure that actually makes us more fireproof and floodproof. So that is why a public single-payer model could potentially be a better model to take care of all Californians. This model exists in New Zealand. We have models similar to that in France and New Zealand. France and Spain and Japan. And so ultimately what I think is the flaw today is that we think that somehow less regulation, a healthier market, quote unquote, a healthier market, is going to take care of all Californians. But what we see in other states with far less regulation, where they let rates rise, is that the same things are happening in those states. Premiums are rising, they're canceling the coverage, and they fight your claim every step of the way. I think we fundamentally need to shift how we approach insurance to be a more public-based model.
So Lalo, this sounds like something that resonates probably with some of your campaign messaging. What do you think about what Jane is saying?
Yeah, that's correct. So I do agree we need to get people off of FAIR as soon as possible, but that also means transitioning them away from the private insurance market. The private insurance market has proven that it is not a stable foundation for insurance in this state. And I'm for building a public insurer that covers everything, not just natural disasters, but that also covers auto, that has single-payer healthcare for everyone. And these models are possible with the resources that California has now. I mean, the reason why we're in this crisis is because of the profiteering and the maneuvering of the insurance industry. They act as a de facto monopoly. They are coordinating with each other to see when they're all going to file their rate increases, to see where they're going to stop writing new policies and which zip codes, and they do it in concert with each other. And this is unfair competition, and it's illegal. They are engaged in an illegal boycott of the state. And so if we want to create a public insurer, what that means is abolishing the insurance companies, seizing their assets, using those assets to fund a public insurance system in the state of California that is actually going to put people before profits.
Thank you. So let's take a step back from this idea of a public-run insurance or a single-payer insurance, and say that we are stuck for at least the near term with private insurance. What do we do to keep private insurers from leaving the state, but still reflect the reality for consumers and the risk that needs to be distributed? Does anyone want to take that?
I think
Senator
one of the
Brown.
things we have to do, and a lot of folks don't want to agree with this, but I think about Al Gore's book, The Inconvenient Truth. We have to look at the fact that the FAIR Plan Prop 103 has worked for the last 38 years. It has suppressed rates. At the same time, we have to agree that housing, building, materials, everything is the highest in California than anywhere in the nation. You would think our insurance rate would reflect that, but they don't. We are on par with the national average. Does that mean we don't try to suppress our rates? Yes. We do try to reduce them? Yes. We have to do all of those things, but really the FAIR Plan has worked, and now the market is trying to adjust. Reasons why some of these companies are leaving is they can't get insurance now. And when you talk about reinsurance, it's the Lloyd's of London, it's the Berkshire Hathaways that have to insure the insurance companies. And they're looking at climate change, which is real. And if we're going to believe that climate change is real, there's a cost associated with that. And many of these insurance companies are underinsured. Most folks, as you saw in your neighborhoods, who've probably had insurance for 20, 30 years, they're underinsured because it was written at the value at the time you bought your house. We all know prices have escalated. So we have to adjust the market. We have to do some of the things that the insurance department is doing right now, doing catastrophic modeling to look at not only natural disasters, but man-made. We have to factor that in because if climate change is real, there's a cost associated with that.
You know,
Go ahead, Senator Allen.
I appreciate the senator bringing up reinsurance, because that's actually where there's massive price gouging happening for the state. And I think actually, if we really want to talk about probably the most useful place to have a public option, I think it's in the area of reinsurance. Right. And there's some really interesting work being done on this that can help to smooth over some of these massive problems that we're having, because there's huge price gouging. There are very few of them. They're taking advantage of the perceived risk in the state, and they're taking advantage of us. And I think that's where we could, where the state could get involved in a way that's not going to ultimately put at risk all the public services that could happen if we switch to a full public model. My fear there is that if I think, remember, healthcare and home catastrophe insurance are two different things, right? When there's a major catastrophe, it's like, imagine everybody getting sick at once. And I worry that we're doing a little bit of an apples and oranges comparison here. Think about what would happen if the state suddenly is on the hook without any private support after a major catastrophe, what that would mean when the state is having to take care of all of the infrastructural challenges associated with a big fire or earthquake, and then on top of that, taking care of all the businesses and homes that have been destroyed. I mean, that would literally bankrupt the state. And as a progressive Democrat who cares about all of the public services that we provide for schools and hospitals and healthcare and home services, that worries me if we don't craft it really carefully.
Well, I would like to respond to that because we didn't actually talk about how we would fund a single payer system. There are lots of ways to actually fund that. There could be an exit fee that allows insurance to go out of the business of insuring in a natural disaster, that they would pay out over a certain number of years because they've been collecting our premiums for decades and investing it, again, in the stock and bond market. So they have huge reserves. Their reserves are actually very healthy. It is true that the state could also act as a public reinsurance. That's actually how they do it in France and Spain, that guarantees home disaster for all of us. But there's a lot of ways to actually stack a pool to make it work. But the most important thing is that the premiums and the returns from those premiums currently go to these billionaire corporations. We would keep that in public hands, and we would invest a portion of that in actually increasing our public safety by investing in resiliency and infrastructure. Currently, the insurance industry has zero incentive to invest our money back into our state. We would do that as the public, and we're already paying for it. If you don't think we're already paying for climate catastrophes when insurers can't pay for it, that is inherently a myth. Taxpayers are already on the hook for this.
So I'd like to pick up on this topic. I think this is a very, very important discussion. And what we're really getting at is a deep question. What is the social purpose served by having private entities, whether they're for-profit or not-for-profit? What is the social purpose served by having them provide property and casualty insurance? There are some forms of insurance that there is no public purpose to have those kinds of entities. Social Security, for example. Social Security is basically insurance against poverty and old age, maybe the single most successful government program of all time at scale. It would be madness to have outside entities run that. Absolutely, the government should run that. Why do we want to have private entities in property and casualty insurance? And the reason is underwriting. The reason is because we want the competition to get the pricing of risk accurately. We have in the United States a federal property and casualty insurance program. It's called the National Flood Insurance Program. And the people who, it's, pardon the pun, the National Flood Insurance Program is tens of billions of dollars underwater. And that is similar to the programs in New Zealand and France, for example. It's a similar type of program. What's the problem with it? They don't do a good job underwriting. That puts taxpayers on the hook. It's even worse than that. Who benefits from that cheap insurance? People who own coastal real estate, who tend to be wealthy people. The people who understand in this industry know that the track record of national property and casualty insurance is not good, and it's even worse if the state of California does it, because when the federal government gets it wrong, they can issue treasury bonds. When the state of California gets it wrong, we have to either raise taxes or cut services. So there are very important questions at play here, but insurance, this is not an empty field. This is a field that people have thought about and analyzed and have real experience with for years, and that's why you really need to have a regulator who understands these things and knows what you need to push for. What we need is strong, smart, effective regulation that makes sure the insurance companies can only charge enough to cover their costs, never more, that the customer is empowered, and we get the benefit of getting that competition for pricing the risk and incentivizing ways to reduce the risk.
Merritt, you look like you've
Yeah,
something on the tip of your tongue.
So thank you. I think we all agree on the problem. We don't necessarily agree on the solution, but that's what we're working on. So I've put forward a very specific plan that I call Cal Reinsure. I'm glad we're talking about reinsurance. And it's modeled on the program that you've referenced in France. It's modeled on what Florida has done for hurricane coverage. It's modeled on a program in the UK, which is a great center for insurance for the entire world, for flood, because that's their big problem. And it basically would move the very specific risk for wildfire risk, community fire risk, and put it into a reinsurance entity. That would allow insurance companies, big and small, and it's really important that we include small, to write the policies without having to worry about that one, to your point, very unique risk that rarely comes up, but that is right now killing the entire market. That would allow companies to come in and do what Patrick says, compete with each other. We'd keep the rates down through good regulation and Prop 103, which I favor keeping in place. And we would get people off FAIR Plan because there would be no need for it.
And if I could just
Yeah,
respond
sure.
to the question of public reinsurance, I just want to highlight an example from the recent fires in LA. State Farm, which is the largest insurer in the state, was on the hook for about $7 billion. And yet State Farm's parent company had a $142 billion surplus, but they still came to the state and asked for more money, for a rate increase. Essentially, they're saying that they're entitled to more of our money in the form of premiums. And I think that that doesn't make any sense to an honest person, especially when these same corporations are engaged in criminal business practices that are exploitative to the people who have survived the fires. And when we talk about public reinsurance, that's really, I mean, I'm a socialist, so I'm running for a system that puts profits before people, but reinsurance is really a socialist solution for the corporations. That's so that the corporations can have the safety net. And that's the one that we deserve. We deserve a public insurer because we have a $4 trillion economy. In the state of California, it's a $4 trillion economy that was built off of our labor, that's built off the people of California. And the climate crisis is going to continue to rage on for the time being. And the question is, who's going to pay for it? Should it be the insurance companies and their executives with multi-million-dollar salaries, or will it be the people? I say that the companies should pay for it.
But I do want to actually answer your question that you asked, which is, what do we do in the current state without a public program?
Right.
And so there are many things that the insurance commissioner can do. And one of the most important things is our rates and how it gets approved. So there has to be absolute transparency on how our premiums are being paid. And we would propose, and I would propose, a certain model of at least every 65 cents of every dollar we pay in premiums must go back towards actually paying claims, the actual business that they're in. And when they dip below that on a 3 or 5 year average, that they would either provide a refund to consumers or they would pay into a state resiliency fund. We also know that one of the other big issues in insurance is that they love to deny, delay, and underpay our valid claims. We should be charging interest and severe penalties when we see this behavior across the board, across the industry. I also think that it's important that as insureds are, when they decide to exit California, that they pay a surcharge, a fee into California when they do that, because they've already been collecting billions of dollars in California before they exit our market. And so there's a number of regulations that I do believe are important. This job plays a very important role in also just enforcing the very good laws we have. California is one of the 3 states that bans the use of credit score in your premium calculation, because that shouldn't have to do with the assessment of the risk of your home or your car. These are all sorts of things that the Insurance Commission can do to ensure that they are fighting for everyday Californians.
So let's dovetail off of that, the issue of consumer protection. What would you do as the insurance commissioner, and this is a question to whoever wants to jump in here, what would you do as an insurance commissioner to make sure that our consumers are protected, just as Jane says, from like predatory acts of the insurance industry?
I would post up the insurance department itself and bring in more staff to review these rates and making sure it's not driven by profit. It should be based on, as everyone stated, risk, not profit. And I've heard internally they need more staff to do those reviews, to expedite those reviews. The Department of Insurance itself needs to be modernized. It's 1,400 employees in that department, but they're lacking many of the tools that they want to be able to respond a lot quicker and hold these insurance companies accountable. So the insurance commissioner has to not only regulate the industry, but he also has to, or she has to, stand up the department to do their job, because it's a lot of delay right now in the Department of Insurance. They're overburdened and overworked in many of those areas, and I would just beef up that review process so we can do it and making sure it's based on risk and not profit solely.
I think, yeah.
Go ahead.
There's also a really, there's a whole enforcement division there, which
Exactly,
you know about,
that 170.
that does, you know, that whose job it is to make sure that we're really aggressively enforcing the anti-discrimination laws that are on the books. We've worked hard over the years to make sure, since 1965, you know, to make sure that the insurance system is far more equitable. It's certainly got massive problems still, but one of the things the insurance commissioner has to be dogged about is making sure that we're protecting people's civil rights, anti-discrimination measures. That goes with the use of telematics and algorithms and a lot of the AI tools that are now being used. We have to make sure that they're not being rolled out in a discriminatory way. So there's a big role for a kind of a prosecutorial approach to this at the insurance commissioner's office that needs to be really aggressively pursued.
And it is very important when you are pursuing these policies, when you're beefing up the resources, that you really do have to be completely independent of influence from the insurance companies. I forgot in my introduction to mention I also have pledged not to accept any money from insurance companies. I'm pretty sure all the Democrats on stage have, but at any rate, I kind of think that's table stakes. But unfortunately, we have a Department of Insurance where we don't always know that they are really independent of influence from the insurance industry. And a case in point, with these terrible wildfires, we've seen smoke damage that's unlike anything that we've seen before. And so the Department of Insurance has put together a wildfire smoke damage task force, which is a good thing, to come up with new standards that the insurance companies have to adhere to in offering coverage. But reporting done from right here in San Francisco at the Chronicle has shown that task force is in fact unduly influenced by the insurance industry. And one of the people on the task force, a woman named Amy Bach, whom I know, who's an extremely well-respected consumer advocate with United Policyholders, based right here in San Francisco, by the way, woo woo. She literally said that she did not think that the results of the task force could be trusted. And so we have to reconstitute that. Whoever is next, and when I'm the next insurance commissioner, needs to reconstitute that task force. So it really does require a regulator, again, who is fighting for the people, independent, and free of influence from the insurance industry, which unfortunately we've not always had.
So Lalo, what do you think about how the insurance commissioner should operate with insurance companies?
Can you repeat that? Sorry.
Yeah, I mean, kind of dovetailing off of what Patrick said, what do you feel like your role, if you were the insurance commissioner, what would your role be relative to the insurance companies?
Yeah, so in the interim, before we build a public insurer, under socialist leadership, that would mean that the insurance department is focused on a core principle, which is putting people before profit. And that would mean putting an emphasis on enforcement of these regulations that already exist. We know that the insurers are engaged in illegal practices like rotating adjusters. They're prematurely cutting off survivors' adjusted living expenses. Survivors of the LA fires and of other massive wildfires, they prematurely cut off the lifeline that they have been paying for decades. That and many, many more. There's thousands of complaints every year that get filed with the Department of Insurance, and that's probably just the tip of the iceberg because, many people are afraid to even file a claim, much less a complaint with the department, because they fear that their insurance premium is going to get higher. And so a socialist leadership in the Department of Insurance would mean going after the insurance executives. It would mean doing a mass public outreach campaign and finding out what are the stories of all of the victims of the insurance industry and levying heavy fines on the insurance companies that are found to be guilty of this illegal criminal business practices and behavior. And that means threatening to lock up the insurance executives and freezing the rate increases until these exploitative practices are put to an end.
Merit?
So if I may, I come from companies that are dedicated to customer service. And even so, I can tell you, writing rules for the internal team to really ensure that service will be there is a tough thing to do. I think we've got a history in this state of trying to get good regulations in place for insurance companies, and yet the bad actors, and there are bad actors along with the good, have worked around it. So here's a core Amazon principle that they use for leadership. It's called invent and simplify. And what's interesting about that is that it puts simplification on a par with invention. And what we need here, along with tougher enforcement, absolutely, is simplification. And it goes to what Ben suggested, right? If your house burns down, you should, and you've gotten, let's just say, $500,000 of coverage, you should get paid $500,000, no questions asked. And the insurance companies will say, and I understand that Democrats in the legislature have apparently bought into the argument that somehow that will drive up rates. But it doesn't drive up rates because if they want to today only pay 50% of $1 million policy, then all they need to do instead is write their cap at $500,000. So that's a big part of it. It's called parametric insurance is the notion. X happens, you get Y, period, no questions asked, done.
Okay. So now we are at the portion where I am amazed at how many questions you guys have. Oh my God, there's more coming.
But you have to separate the half that says, Nancy, what makes you such a great moderator? What's your secret?
He knows who to butter up on the stage. So I think this is a good question, and I'll have each of you answer it succinctly, please, so we can get through more questions. What makes you uniquely suited for the role of insurance commissioner? And as we said, it's a statewide office. You will have to interface with the legislature, with the governor. You will have to get changes through legislation passed. You will have to make sure that there's enforcement. You've got the right staff to do enforcement of the laws on the books, and thinking about like the Grand Master Plan about how to reimagine insurance in California. So what makes you uniquely suited for this position? And we will just go down the line.
Yeah. Great question. I think what I bring to this race is just a track record of taking on. So we have a lot of talk about taking on tough industries and fighting against them and making progress. I've actually done it in the legislature over and over again under very difficult circumstances. As you say, there's a lot of pushback. There's a lot of people that are, including Democratic colleagues, who are very bought into industry arguments. And yet I've put bills forward, taken on the petrochemical interest, taking on the massive hospice folks that have been abusing seniors, taking on the insurance industry through the contents coverage bill that you mentioned, taking on the new car dealers, powerful interests over and over and over again, and getting meaningful legislation through that helps protect consumers. So for me, this isn't just kind of talking points. This is my entire work in the Senate. And I've got a track record you can take a look at, you can interrogate, and I also have I know the process. I think a lot of what's being discussed here will require massive work through the legislature and convincing the governor. The kinds of radical changes that, in fact, every single person has mentioned would require massive political work through the Capitol. I think that most of my colleagues are endorsing me. I think they know that I've got a really good track record of getting tough stuff done through the legislature, bold issues, and they know that I've got the chops and the experience and the expertise and the relationships to fight for people in the legislature.
Okay, great. Thank you, Steve.
I, too, have shown up my entire life. I'm the only person in the 14 years in the legislature never missed one day of work. It's about showing up, standing up, and speaking up. I've passed major legislation in this state that has been modeled throughout the nation. I did the Bruce's Beach to return the property to the African-American family who had it stolen in Manhattan Beach in 1924. I did low-income solar, the first bill in the nation for low-income solar. Internet for public housing, the only police decertification bill we have in the state of California. I authored that bill. And if there's any fans of college sports, I and Nancy Skinner authored Fair Play to Play that created NIL to give college athletes a right to monetize their name, image, and likeness. I've done heavy lifts my entire political career. I have never backed down from a fight, and I pride myself, again, on never missing a day of work because this is a job you can't phone in. You have to show up. And I'm smart enough to know there's no magic wand in getting elected. The magic is to work. The magic is the staff that you surround yourself with. I'm the only member who now have two of my former staffers who are now legislators themselves. I'm the only member that had three of my staffers go into the governor's office. So I trust my staff. I hire bright and the brightest, and the best and the brightest, and that's what I'll do as your next insurance commissioner. I will allow folks around me to let me know what I know and what I don't know. And that's how I've always operated. Plus in corporate America. I've worked in corporate America as well as was program director for LA Conservation Corps, one of the leading young adult corps in the nation right now. So I do the work. I have a track record of proving accomplishments.
Thank you, Steve. Merritt.
Sure. I believe there's no question that I bring business experience that's unique to the equation. And that is experience with companies, again, that are first-in-class innovators and first-in-class for customer service. And that is what I entered the State Farm rate proceedings with. That's the pitch that I made to the judge who was overseeing it. And fortunately, he agreed with me. And that's what I would bring.
Jane.
So we talk a lot about the affordability crisis in California, but for most of us that have been on the front lines, we know that expensive homes, expensive groceries, expensive insurance are an outcome of policy failure. What we have in California as well is a political courage crisis. And I don't think that we are in the state that we are in because we didn't have enough actuaries in the Department of Insurance. What we need is political leadership. We talk about not just looking at our rhetoric. I agree. We should look at our demonstrated track record. Over my 12 years as an elected official, I took on impossible issues that they told us we couldn't get done and got it done. San Francisco is still to this day the only city that has made community college tuition free for everyone. This lifelong learning institution has lifted more Americans in the middle class than any other institution in this country. We passed a $140 million annual revenue measure to make early childhood education affordable to all families in San Francisco. And I represented a district that oversaw 80% of San Francisco's commercial and residential development. I'm proud of the fact that I negotiated more affordable middle-income housing than any legislator in California, and I did that without ever voting down a development housing deal. This is the kind of track record that we want to see in an insurance commissioner. The current system is broken. Premiums are too high. They're canceling our coverage, and even if we have insurance, they fight our claims every step of the way. We need a different vision that puts people first in terms of how we can make this industry work for everyone. And by the way, I have to say this again, we require us to have insurance. If we cannot make it affordable and available to all of us, we are shutting everyday Californians out of the economy. The final thing I will say is the last 5 years, I have crisscrossed the state of California. I'm probably one of the few folks here that has door knocked in Sacramento, in San Bernardino, in San Diego, in East LA, in Oakland, in Fresno. And this means that I have been in touch with voters across the state. And a big part of this job is going to be listening to the voters and understanding the different regions and the various needs that they'll want to see from their insurance commissioner. And I want to bring that to this office.
Well, the next insurance commissioner, without question, is going to have to reconcile the climate crisis with the insurance crisis. And I'm an environmental science teacher and a biology teacher. I spend every single working day talking with the youth about, sustainable solutions to the climate crisis and how we got here in the first place. The next insurance commissioner is going to have to understand things like forestry, like toxicology and soil remediation, these things that are actually affecting people's lives. And when I'm not at work and I'm in my free time, I'm also organizing, forming tenants unions so that tenants know their rights. I'm a labor leader in my union, UTLA. I'm proudly on the bargaining team, and I'm looking to inspiration from our union siblings in United Educators San Francisco. I mean, really, what I want everyone to understand today is that the crisis that we're facing, they do have a solution, but it's going to require us to organize, to take to the streets. That's how anything has been won in this country. Whether it was Medicare or Social Security or disability insurance, these were things that were fought and won by ordinary working people who took to the streets and made their voices heard. But to do that, we have to have the leadership that is unafraid to infringe upon the profits of the billionaire class. And that's why I'm running with a slate of candidates called Vote Socialist, because we know that only a socialist system is going to get us out of this crisis in the first place.
So when I think it comes to myself and my fellow Democrats on the stage, I think there's a very clear choice. Do we want an insurance commissioner who's an experienced politician but has no expertise in insurance or financial markets or analysis? Or do we want somebody with deep expertise in insurance and financial analysis, but not part of the politics that created the problem? Our market is in crisis. And the reason we've gotten here is because the way we've chosen our insurance commissioner, who is the chief regulator, the chief consumer protector, the person responsible for making sure the market works and works for you, we've chosen that person as an experienced politician without any particular experience or expertise in insurance or financial analysis. And I think we would do better to select somebody who's completely focused just on doing this job and who does have deep expertise in insurance and financial analysis, and that's why I'm running. And one thing I do want to make sure to emphasize, this is the very first time I've run for elected office. I will not run for any other elected office if elected insurance commissioner, because I am not doing this to launch or further a political career. I'm doing this to serve the best way I think I can for the people of California.
Okay, I think we have time for one more question, and then we'll kind of move to closing statements from everybody. This actually is a question from a Department of Insurance enforcement attorney of 25 years of service. So thank you for your service, whoever you are out there. Talk about Prop 103 and how you would reform that legislation, or if you think Prop 103 is adequate in the way that it is right now. Anybody who wants to jump in?
Yeah, I mean, I'll start with saying Prop 103 has done an incredible job of keeping rates low and protecting consumers in all sorts of ways. So I don't think I think we shouldn't do anything that would harm consumer protections or and I think it's kept rates low. The one thing I think that we would merit some examination is, it's been brought up, climate change is very real. Only looking at historical data to model future risk is silly, given all that we know about the massive climate changes that are happening. So allowing for climate-related modeling, I think, would be a really good idea. Prop 103 was written in the late 80s, when only the petrochemical interests knew that climate change was happening, plus some chemists.
I too say Prop 103 needs to be modernized to bring it up to the day's standards. It's doing what it's supposed to do: suppress rates. There are 19 other states that have rates higher than California because Prop 103 is working. But again, it was written in 1988. What is still existing that was in 1988 that we're still going by today? We need to modernize it. In many ways, some of the challenges that the insurance commissioner is facing is because of how the bill was written. We're going to need new legislation to modernize the department, and making sure also, 103, I should say, and making sure that we can respond much quicker. Prop 103 allowed too many challenges to rate increases as well as rate decreases. It takes on average a year to a year and a half to get our approval in California. That's far too long. So we do need to tweak 103 and to bring in something that we're just starting to do as of last year, catastrophe modeling, to use complex computer data and science to factor in, again, climate change into today's market and understand how that's impacting. That wasn't thought of when we passed 103 in 1988.
Yeah, so I completely agree. It's not Prop 103 itself, it's the way it's been interpreted and the way it's been implemented, and that can shift. And so I would say two things about that. One, yes, it takes forever. And I've been in the State Farm rate proceedings. I thought they were supposed to be done a long time ago. I've just bowed out because there's obviously conflict of interest. But here's the thing. State Farm has been very, very slow at coming forward with the information that everybody needs to approve the rates. So here's what I would do. I would say, here's your application that you need to provide if you want an increase in rates, if you're an insurance company. Bring that information day one. Let's not have a trial where we have to get it out of you in some legal process. If you don't have the information available and provide it day one, the answer is no. Go back and get it, right? That would cut us down to a week instead of years. That's number one. And number two, just very quickly, the basis upon which I actually was moved to join in the State Farm rate proceeding is that the department makes no connection between rates and the service that people get. Which is, and I said in my pleading, that's like saying you're going to have somebody who the state is going to determine a rate for a car, but we're not determining whether it's a Kia or a Tesla. I mean, it makes no sense at all. And I don't like anything, and I think it's bad for government when there's too big a disconnect between what people accept as normal and logical and what the law is doing. So there should be a link between those two things.
A key thing about Prop 103 is that it was passed by the voters of California. And so reforms to it would then, again, have to go back. And so what is the advantages of having good political leadership is understanding how to work with the framework we have. I often talk to folks about what the challenges or advantages of running for office and being in government is, and that is that you actually work within a box. You know how you talk a lot about working outside of the box? You are in a box, and you have to work with what you have, and you move things around, and you find resources, and you figure out a way to make it work for everyday Californians. Prop 103 has been said across the stage, has been an incredible protection for consumers and has kept rates more affordable than in other parts of this country. But it has to be well enforced. So one of the things that we want to make sure is that we don't allow, again, excess profits and CEO pay and Super Bowl ads to be calculated into our premium ads, that it's truly going towards the business that they're in, which is paying our claims and being there for us in the event of a fire, a collision, an illness. That is why we pay into our insurance premium market. Now, I do think that there are a lot more things that we can do to be creative. For example, I mentioned earlier on that we have a nonprofit, publicly run auto insurance program for low-income drivers. We read under Prop 103 that the insurance commissioner can unilaterally change the determination in the rules to actually expand the Californians that are eligible for this public nonprofit program. We should go out and compete on the market with these private insurers and provide, again, affordable auto insurance for more Californians. And this impacts so much of our state, our ability to pick up our kids, to drive to work. This is an incredibly important program that the insurance commissioner, we believe, can do and expand.
So the main reason we even have Prop 103 is because in the 80s, Consumer Watchdog led thousands of people across the state in getting Prop 103 passed. That's exactly the type of movement that we need in this moment as well with regards to property insurance. We need to continue to mobilize the victims of the insurance industry, the survivors of natural disasters, and everyone who pays insurance into a broad movement that is actually going to get these reforms done. And I think we should protect Prop 103. It's the reason why all of us are here today, that this is an elected role as opposed to an appointed one. And it's the reason that the insurance companies have to seek prior approval from the insurance commissioner to begin with. And I think that the insurance commissioner should exercise that right, the right to deny the rate increases, the right to even substitute the FAIR Plan with a plan that actually works, because the FAIR Plan is notorious for having the lowest customer satisfaction, for having the most delays and denials. There's massive authority that is granted to the insurance commissioner. We need to use it.
Patrick, do you have any thoughts about Prop 103?
So I pride myself on being open-minded, and so it's certainly possible. It has been 40 years or so, since a little bit less, since Prop 103 is passed. It's certainly possible that there are ways that it could be modernized and improved. That is not the basis of my campaign. I see no reason that Prop 103 needs to be changed. What Prop 103 does do, it provides a tremendously powerful regulatory structure. Power can provide very good outcomes, but it can also provide very bad outcomes. The more power you have, the more important it is that you skillfully use that power. The reason we're in this mess is because that power has been badly used for a long period of time. But with skillful application, with skillful regulation, I do think that we can have well-functioning insurance markets, again, that holds insurance companies accountable, makes the market work for customers, and only allows the insurance companies to charge what they need to cover their costs, which was exactly the intention of Prop 103, that rates should be neither excessive nor inadequate, thank you very much. It's like a mantra, right? Neither excessive, nor inadequate, nor unfairly discriminatory. That is exactly the right standard. Prop 103 provides the power to do it, but that power needs to be used skillfully.
Okay, so that was a very fast hour. And there are a lot.
We could talk about this all day long.
There are a lot of questions that we didn't get to, but let's go through our 1-minute closings, and then we'll have a reception afterwards, and you guys can talk to all the people that have come here to listen to you. So let's go in reverse order. Patrick, your 1-minute closing.
I'm going to keep it shorter than 1 minute. Thank you, everybody, for coming. My name is Patrick Wolf. I'm running for insurance commissioner. I think you've heard my rationale for running. I would be remiss if I did not mention that, yeah, I am a pretty good chess player. You've probably seen my social media. Thank you very much. I would be the first to admit being a champion chess player is no way a prerequisite for being insurance commissioner, but it did teach me how to think strategically. It taught me how to persevere. It taught me how to fight and win in tough, complex, intellectual, challenging situations, and I will bring that to the role of insurance commissioner. Thank you.
Thank you.
So California has a $4 trillion economy. The majority of that wealth is being hoarded by 194 billionaires, while the bottom 39% are living paycheck to paycheck. That is unacceptable, that in the richest state, in the richest country on earth, we do not have guarantees like homeowners insurance, like healthcare, like so many other assurances that the government needs to give us. And I think I mentioned earlier that my siblings in UASF, well, I also want to mention that the people of Minneapolis have shown us how to get things done. They have had a historic general strike recently that proves that they are the real counterweight to the Trump 2025 agenda. Any real change that has happened in this country, it's never been because a politician hands it down to us out of their own goodwill. It's the people who seize that change. It's the people who take to the streets, who build a movement, and who can actually fight for it. And I think that absent that mass movement, unfortunately, any one of my colleagues runs the risk of becoming nothing more than the next Ricardo Lara, and we cannot afford another Ricardo Lara. We cannot afford more and more fecklessness in the face of the insurance industries, in the face of a changing climate. And so I encourage people to look up the Peace and Freedom Party, to look up our socialist history, and how you can get involved, because we're building this movement with or without the elected officials who have gotten us in this crisis in the first place.
All right, Jane, your 1 minute.
So I'm going to start with the current system is not working for anyone. It is too expensive. They're canceling our coverage. And even if we have insurance, they fight our claims every step of the way. If you are looking for a candidate who is just going to tinker with the system, I'm not that candidate. I believe that we need a systematic reform of this insurance industry to actually make it work for all of us. I'm very excited to run for insurance commissioner. It is an under-leveraged office, an underrated the office that could be a powerful platform for working families. It is a key part of how we all participate in this economy. So we have to make insurance affordable and available to all of us. I would be honored to earn your vote. Again, I've also been endorsed by close to 100 elected officials up and down the state at the local level and cities across California, by some of our largest unions, by the Senator Bernie Sanders, Malia Cohen, and again, I would be honored to have your vote and endorsement as well.
Thank you. 1 minute exactly. All right. We're down to the last three.
So I think, again, Jane and I agree on almost everything in terms of general approach, probably just not about how to implement things. But I agree, number one, that this office has not been used nearly in as powerful a way as it could be used. And we have not spoken today really at all about the other crises that exist within our state. In auto insurance, where rates are spiking, in business insurance, where small business companies are having huge challenges now because of the insurance they have to pay, and in health. And health is way more complicated than wildfire. But this position can absolutely, we're one of the biggest insurance markets in the entire world, and we should be vocal, we should be out there, we should be leading. California in general should be leading. Right? We are the greatest innovators on the planet. We need to bring that innovation to work to solve insurance, I completely agree, get more choices and get those costs down.
Great.
And if I'm elected, that's exactly what I will seek to do.
Thank you, Merritt.
Thank you.
Steve.
Thank you. Again, Steve Bradford, I'm not doing this for any other reason but for the people, we the people. That is what my life as a public servant has been about. It's been about the people. It's never been about me. I, too, will not be running for anything else after serving in this position. It won't be a launching pad for governor, U.S. Senate, whatever. I'm not doing it. I've done 26 years of work And this is what we need, someone who's going to show up and do work. I've served in both houses, both the Assembly and the Senate. I was part of the Problem Solvers Caucus, which was bicameral and bipartisan, about dealing with tough issues in the state of California. That's what I have done. That's what I will do. This position requires someone who's going to show up and do the work. And that's what I'm going to do. It won't be the political winds that will be guiding my decision because, again, I won't be based on how's it going to affect my next race. It will not be another race for Steve Bradford. It's about solving this problem. I grew up in an insurance household. My father sold life insurance. So I learned at a very early age the importance of having coverage. And I will take that same consumer approach as your next insurance commissioner.
Thank you, Steve.
Thank you. Well, I think anybody who knows anything about this job knows that it's a terrible launching pad for anything in politics because it's such a hard job. Everyone hates anything even remotely associated with the word insurance. So all of us, I think, are here, gluttons for punishment, but really all of us are here because I think we deeply care about public service and trying to make this broken system work better for people. And that's the approach I've taken to my time in the legislature. Difficult bills on a wide variety of difficult issues, fighting for consumers over and over again, fighting against climate change, making our state better prepared for the ravages of climate change through Prop 4 and through a number of other bills that I've worked on through the time I'm in the legislature. I've also, after the fires happened in our community and we had that awful experience, we pivoted our entire district operation to providing services to people. And so much of the work ended up being all about helping people get their insurance payouts. And it was ridiculous. But we helped hundreds and hundreds of people get properly treated by insurers. I just saw one of them the other day who came up and thanked me, and I just, both him and his church were able to get payouts because of the work that we did. Now, I thought to myself, why would it take having to call your state senator to get the help you deserve, that you need, that you've been paying into the system for years and years? I want to change that. I want the Department of Insurance to be customer friendly. I want a call there to make a difference when you are up against a disaster, that you're going to be well treated. I want to change the culture in our system so that our insurers are going to be far more responsive because they know that they have an insurance commissioner who's in charge, who's going to hold them accountable aggressively to treat people better. That's why I'm running for this position. I'm Ben Allen. I'd be so honored to have your support.
Okay, thank you. Thank you to our audience, and thank you to all of our candidates here for coming tonight. Let's have a round of applause for them.